5 financial mistakes that you want to try and avoid. I don't want to say if you do these things, you're going to be completely financially unsuccessful, but it's really hard to get ahead financially if you get sucked in to some of these traps. First financial mistake to avoid, taking on too big of a mortgage. By too big of a mortgage, I mean if your mortgage is more than 35% of your take-home pay, you are house poor. You're tying up too much of your money in the place that you live, and you're not able to save, you're not able to invest, you're not able to give, you're not able to do some of these other really crucial and really important things that are required in order for you to be financially successful. So keep your mortgage under 35% of your take-home pay. Ideally, it's 25%. If you live in a high real estate area like me, I live in California, it's gonna be a little bit higher, but no matter what, keep it under 35% of your net income, your take-home pay after taxes. Second financial mistake you wanna avoid, vehicle mistakes. All of your things with either a motor or with wheels, cars, trucks, SUVs, wave runners, boats, campers, ATVs, anything that's you use to transport or you use kind of for fun, you want to make sure that the total value of those things adds up to less than half of your annual income. Why is that? Because all of those things depreciate in value, meaning you buy them up here and then eventually over time they go down in value. And so if you go more than half of your annual income, now you've got too much of your money tied up in things that go down in value. Couple tips to avoid. Don't buy new. We have to imprint into our brain that buying something new is a luxury. And you may not be able to afford luxury at this point. One day you will if you do the right things, but today, can't afford it. For vehicles, look 2-3 years old, low mileage, you're gonna find them for 40% less than a new vehicle. That's ideal. If you buy something new, as soon as you drive it off the lot or you tow it off the lot, boom, loses 10, 20, 30% of its value instantly. We don't want that. Bad financial decision. Also, along the theme with car mistakes, don't ever lease. It's plain and simple, it's the most expensive way to operate a motor vehicle. Leasing is for people who want to keep driving something fresh and new every 2 years so they can keep up with the Joneses. If you're playing the long game like me, don't lease a car, and then you can invite the Joneses to your lake house in 10 years after they've filed for bankruptcy. Number 3 financial mistake, jackhammer the like button. Every like on this video I get, someone is raised out of poverty, so don't do it for me. Do it for them. Third financial mistake to avoid, paying for whole life insurance. Whole life insurance is a terrible deal, especially the younger that you are. Don't get sucked into buying whole life insurance. If you do need life insurance, if you're married with kids, somebody's dependent on your income, get term insurance. 20-year, 25-year term insurance. A term policy is 80%, maybe even more cheaper than a whole life policy. Yeah, it expires 20 years from now, but 20 years from now, you're gonna be loaded because you're doing the right financial things. And by right financial things, I mean you're not wasting money on a whole life policy. 30 years from now, I'm gonna be worth several million dollars. I don't need a $250,000 whole life insurance policy at that point. If you're financially responsible, you don't need life insurance forever. How much life insurance? 10 to 12 times your income. So take your income, multiply it by 10, that's how big your policy should be. Fourth financial mistake to avoid, don't ever take an unsecured loan. An unsecured loan is something that's not attached to collateral or attached to a property, for example. A mortgage on a house is a secure loan. If you don't pay the mortgage, they're going to take the house. A loan on a car is a secure loan. If you don't pay the car loan, they're gonna take the car back. An unsecured loan is a loan that's not secured by anything. Why is that significant? Well, the interest rates on unsecured loans are astronomically higher than secured ones. My mortgage interest rate right now is 2.875. My car loan interest rate is 2.84. My local credit union is quoting unsecured loans right now at 8%. That's crazy. Don't do that. Really try and avoid borrowing money as least as possible, but never borrow on an unsecured loan. Fifth financial mistake to avoid, waiting too long to invest. Invest right now. It doesn't matter what you think the economy is doing, what you think the outlook is. Start today. The longer you invest, the more you'll have, plain and simple. I've fallen into the trap of, oh, I'll start investing in retirement after I do this, or after I do that, after I buy this, or after I take this trip. The sooner you start, the better. The one exception is if you have debt that has an interest rate of over 5%, I would hold off on investing and put all of your money into paying off that debt as quick as you can. Once you start getting over 4 or 5%, it's really starting to cost you a lot of money to have that debt out there. If your employer matches a retirement contribution, you should always do the minimum to qualify for the full match. It's the best return on your money you'll ever get, and it happens instantly. Hope you enjoyed that. Hope you got something out of the 5 things to avoid. If you like money videos, if you like budgeting videos, be sure and like and subscribe if you haven't already, and I'll see you next time.